One thing I'm worried
Right.
about is that inflation creeps back up.
Sure.
That's the only concern. I really, honestly, I'm not as concerned as I used to be. Right?
Yeah.
But inflation concerns me that it could come
Sure.
back into play.
Sure.
And rear its ugly head. And then what do we do?
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to the Market Moment. This is Matt Walters here with John Martfeld
Good morning.
and Lee Mackey,
Good morning.
and we're going to talk about the election. So last
What?
week, the election finally got here. Also had a Fed rate decision that came out on Thursday.
The news cycle was
It was a big
somewhat
week.
hot last
Yeah.
week.
Yeah, there's a lot going on for sure. So a lot to talk about and the market's reaction since these things have unfolded. So let's start with the election. Thoughts on the outcome and what we've seen from the market since the election results.
You know, it was nice knowing a winner. Within 24 hours.
Yeah,
I mean,
yeah.
really within 18 hours. Obviously, the markets are pleased, at least initially. Which is interesting because you would have thought some of that had been priced in, but obviously not. Yeah, I mean it's a very pro-equity rally. I think what the markets are excited about doesn't mean this will come to fruition, but what they're excited about is the prospects of Trump tax cuts from 2017 being extended.
Yeah. I think that's kind of an expectation at this point.
Taxes being lowered, even less regulation. I mean, a lot of pro-business.
Who was it that came out and said that Trump will be the most stock market friendly president ever? Did y'all see that?
I don't
There
know.
was somebody came out and said that.
I mean, it's, sadly, he's very fixated on the stock market. I don't know if there's direct correlations or not, but, I remember in his first term, him talking a lot about where the markets are. But, it was positively met. The thing I'm a little surprised about is that, then 2 days later we had the Fed decision. A December cut is looking maybe a little less likely, even though some people think that December cut will happen, but a January cut will not. I'm really surprised we haven't had any kind of pullback. I mean, once the rally occurred, we haven't had really any profit taking to date. We'll see.
So I saw something I thought was pretty interesting. If Trump corporate tax, for the good news for the tax side, right, which is why I think the market rallied. Market rallied this summer after the first debate when it looked like Trump was going to take care of Joe Biden, right? And Joe Biden looked lost, and it looked like it was over. The Democrats threw a curveball. Kamala Harris goes in, and she gets a lot of momentum early on. And the markets, remember, every August timeframe, markets were a little not knowing where things were going. And so I think this, when the election happened, we didn't know. The polls were all over the place. So the market is happy about the tax stuff, I think. One of the things I heard I thought was interesting is the market's overpriced. The average PE ratio right now of the stock market is higher than historical average, so on. But how do you get that back in line? Either you have a pullback in stock prices or you have a increase in earnings. So with corporate tax cuts potentially on the way, I think the idea is that the earnings will catch up to the price, and then we will not be overvalued, and the market will keep on moving. And there was one stat: if the corporate tax rates go down to where they're supposed to, the expectation is our stocks right now would be about average historical PE ratios, which I thought was just interesting. So it kind of says there's more room to run on the market. It's not done, and I think Trump getting elected with the tax issues made a big deal. I think if Kamala would have won, or there would have been a Democratic sweep, I think you might have seen a little bit different, because then the pressure would have been the other side. And so I think there would have been selling had that happened. Now, again, we all know that could be short term. This rally could last for a little while, and then reality sets in, and there could be a sell-off at some point. That doesn't mean it's going to keep going forever. But
I think one thing that's kind of overlooked in a lot of this is I think this rally may have more to do with the fact that Republicans look like they're going to have both sides of Congress, than who's in the White House. Because I really think that I don't think that anybody saw this level of Republican sweep. I think that a lot of people felt like the Senate would go red and that the House would flip blue. That has not happened. And I think what the markets are seeing is, man, we've got 2 years of possibly some pretty favorable
Hopefully very
policy.
business friendly,
Yeah,
tax friendly.
Yeah. But I mean, I heard it said this morning, Trump is a lame duck. I mean, think about it. He hasn't even started. They're already calling him a lame duck. So I think he wants to cement a good legacy, believe it or not. And so I think he feels like he's got a 2-year window to make some things happen.
Yeah. I was first and foremost, I was thankful it was very decisive, just so that we weren't in this, back and forth of, hey, we're counting votes 3-4 days after the election. So that was good. But looking at what's done the best since election night. So if you look at the different sectors, right, financials. So if you look at like XLF, financials have just taken
Torn
off.
it up, yeah.
They're up almost 7%, 6.8% since election night. The other two sectors that are up big, so you've got financials, energy, and technology all up about 4% or more. And everything else is actually flat to negative. So,
I think small caps
have
hurt because I think that the way he won, I think most odds makers are now saying the Fed is not going to lower rates.
but small caps are up huge.
No, the small caps are up huge because of
since
the
the election.
Since the
cuts.
election.
Since the election.
Since
Okay.
for the cuts. But if we go into next year and the Fed stops cutting, which is very well what could happen, right, for a period of time, then the small caps could come back to earth. But small caps look good because of the Fed's action. And I just look at, like, I go back before the election, and there was what's going to happen if the Republicans sweep, right? Which was a small chance. It was a small chance of either side sweeping, but looks as if the Republicans are going to sweep. The House is not decided yet. There are still several races in it, and they all matter. But it looks as if the Republicans hold enough gain in several places with very few votes left to count that they should maintain the House. But it's very small. It's a very small majority. But we can look for fully extended 2017 tax cuts with the corporate tax cuts possibly going down. We just talked about that. Higher tariffs on China. What does that mean? We could do a whole show on what tariffs mean, because that's a good and bad. Curtail green energy subsidies, reform Medicaid. And I think those things are all good things. And I think that the green energy subsidies, basically that goes along with just overall massive government regulation and massive government that is going to hopefully be reversed. So I'm kind of excited for the next couple of years. Now, I also know that history tells us in 2 years from now, no matter what, every single time this has happened, the second, like when somebody has all three,
the
very
midterm.
first time they have a chance to lose one of those, they lose one of those, right?
Yeah.
So most likely this is a 2-year window to get a lot of things done. If you do everything right and you lift all Americans, both left, right, doesn't matter their race, doesn't matter anything about it. If you lift all Americans, maybe they continue on, right? But my concern, President Obama had the same thing his first 2 years in office, and Trump, I believe, had it the first 2 years of his office. What I don't like is that most of these parties are lazy and they don't get half the things done that they're supposed to get done. So
it seems like he's getting after it with appointments, and maybe they're
it does.
trying
It
to
looks
get the
good.
ground running. So if you look at small caps are up 20% year to date, 8%, almost 8% since election day.
Wow.
So a big part of year to date return. So if you look at, I'm gonna commit a sin on this podcast and quote Brian Westbury. Which just makes
I can only do that.
As much as I like this guy, it makes me sick because it just validates John Martfeld. But so he put out a really good, they called it Mandate for Change.
Yeah.
Did you see that?
I read that, yeah.
So I thought it was pretty good. So there were 13 things that, from Brian Westbury's perspective and kind of speaking, I guess, on behalf of First Trust and himself, like what Trump should do right away. So I just wanted to roll through some of these real quick. So extend the 2017 tax cuts. Close DEI offices in every government agency. Put universities. I loved this one. Put universities and colleges on the hook for 50% of every student loan.
Love that.
So if there's defaults, like the university has something on the line.
Love it.
Like,
Absolutely love it.
Yeah, we need to get. There needs to be some
reining
some
in.
ideas there that come
yeah.
out. Deregulate, cut. Just across the board. Asset managers should no longer be able to vote shares in the companies that their clients actually own, which I agree with as well.
Yeah.
You've got a few of these. For people that don't know what that means, like you've got a few of these big asset managers that run trillions and trillions of dollars, the Vanguards, the BlackRocks of the world, that are basically controlling the proxy votes and fights that go on in these corporations because of all the votes that they have. Says drill, baby, drill. Cut spending. Let's see here. Hold on. Decrease the Fed balance sheet. Push the Fed to a scarce reserve. Tariffs. They said tariffs. China's fair game. It doesn't respect intellectual property rights, human rights, or fair trade. China is the developed world category. Is in the developed world category now. No need to support it with beneficial trade agreements.
100%
but
agree.
we need to be careful with broad-based tariffs. So they were saying tariffs on China, but be a little more careful across the board.
Yeah.
And then lastly, do not for any reason get rid of the debt ceiling. Make Congress do their job. So I thought those were
Brian Westbury,
I thought
my
those
hero.
were 13 good points.
You know what you haven't heard?
Tell me.
Deficit reduction.
Well, it's in there a little bit. One of them was,
He gets into it. I was
Yeah.
giving that. Yeah, he gets into it on one of his points.
It's yes. Okay. So
I heard Trump mention it once on the campaign trail.
yeah, it's
has to get done.
it has to.
Now, by deregulation and by putting like Department of Education, for example, if they just eliminated Department of Education, which is a rumor, and put it to the states, that cuts a lot of cut a lot of spending. For example,
So last week,
yeah,
was in Florida, got to hear some of these guys talk. Elon Musk is taking a huge role so
everywhere.
far.
Yeah.
So they talked about last week in Florida. You know what one of his ideas is? Which Westbury was the one who talked about it. And he said when he first heard it, he thought this makes no sense. But then when he read it more, it started making sense. Yeah. Musk is throwing out the idea that you basically send half of the federal employees home, but keep them on the payroll. And his point is they don't do damage by being on the payroll. They do damage by going into the office.
Yeah.
So he said, keep paying them, but just send them home and let essentially
fruition. Yeah.
Yes, and then basically saying, less regulation and so forth. But then the other thing that's kind of come out, this is completely off the topic of investments, is, our governor here in Arkansas is holding a press conference today with there's no topic.
Oh, gosh.
So the
might be,
speculation is, which of course you've not heard her name at all coming out of Mar-a-Lago.
Yeah.
But the speculation is that she's resigning. And I'm not spreading a rumor. I'm just saying that it's interesting.
Yeah, it's
that
You heard it first here from Lee Mackey.
But I mean,
but it's easy to speculate that.
it is that she has announced a press conference.
Yeah.
We need her to hang around and get us to zero state income tax
Oh, my
state
gosh,
real
I know.
quick, and then she can go do whatever she wants.
I know.
Anyway, I don't even remember what time it is, 10, 11, 1 o'clock,
Gosh,
something like that.
That's so amazing because she's a very, very big friend slash,
Yes.
fan of Trump.
Yeah.
I mean, so
Anyway,
I can see something there. Interesting. We'll be watching out for that.
Yeah. So
sure.
a big win for the conservative voters, conservative people in the country, and hopefully Trump does what people have put on him now, to go do a job and deregulate and keep taxes low and be business friendly. And in that kind of environment, you can make a very strong case that in and of itself benefits everybody. Everyone should benefit from that. So
I do hope that everyone will be open minded. I mean, he is a polarizing figure, but you hope that he'll get the benefit of the doubt initially, and some good things will happen.
I did some research on just a side story, but just kind of funny. Going back the entire list of presidents for the history of our country, there's a stat. They keep track of stories during presidency and during campaigns and so on of a president. And there's a positive negative story correlation, right? So they keep track of that. The highest negative story president in the history of our country was Richard Nixon prior to Trump. And Richard Nixon, who was impeached and left office in shame, had less than 50% of the stories written on Richard Nixon were negative, but he had the most negative stories written against him until Trump. And Trump, it's 90%, 92% of stories on Trump. So it's national. It's through social media, through any media source, has been negative. I look at it like this guy has fought so many things to get where he's at, and I know that everybody's the theme is that he's a bad guy and all these kind of things, but he has faced more challenges than any human being has ever faced in U.S. political history, and he's made it to where he's at. I hope, and I like the idea that he's got RFK, he's got Tulsi Gabbard, he's got Elon Musk. These are people that are not conservatives that are helping him. This is fantastic. Like, I hope it can bring people together and realize that all of this negative stuff can make people kind of feel more hateful to a person or whatever. He has had an overwhelming amount of that. Hopefully this can subside. And if we lift all ships and everybody gets benefit from this stuff, it'll be fine. And that's what I'm hoping and praying for.
Yeah. Right. And I think that the biggest thing the market cares about, at least immediately, is the two things would be, the tax extension, right? The tax is a little more reassurance. Corporate tax rate's not going to jump right back up in a year, and just deregulation. I think those, in my opinion, are the two things.
And they're coming. And that's great.
It will be interesting to see what the current administration tries to do in the next 45 days.
Yeah.
You see the push. There's something about trying to get Kamala in
Yeah.
office. So, anyways, all kinds of crazy stuff.
Yeah.
What about the Fed? So the Fed cut 25 basis points. Next
Got
next
overshadowed.
meeting in December.
Looks like they're going to in mid-December, sounds like.
Yeah, I think the odds are still that they will. But I think, and there was like a CNBC article this morning talking about, fewer rate cuts next year. Now that Trump has won, and so I don't know, thoughts on.
Well, CPI is up 2.4% in the last year. That's real close to their 2% target.
Right.
So it makes sense to me. They were never going to get down to that 2% target that they put flag in. They put the flag in the ground 2 years ago, whatever. They'll never. I mean, well, maybe they will. Hopefully they will. But that's passed, right? So 2.4% is really close. So for that matter, it makes sense that they did it, and it makes sense that they'll do it again in December. I think it's the next year, to
Moving
your point,
forward.
forward that where we're going to go. Again, I think the Fed gets so much credit. The one thing that was in Raspberry's report there about getting scarce reserves banks back into scarce, I think that, or the reserve, I think that's important, and people don't overlook talking about that.
Sure.
It's kind of like wild west right now. If we get that kind of back in line before 2008 financial crisis, it might change things a little bit. Besides just what the Fed does on quarter point up or down. So there's a lot to look at the Fed right now. But I do think we're going to get another quarter point drop in December. And
knock on wood, and I'm not a big fan of the Fed by any stretch.
Me neither.
But to give them some credit, like they've done a decent job up to this point. I mean, when you think of what we've gone through, now I'm not saying I support everything they've done. I'm not saying I want them to have the balance sheet that they currently have, any of those things. But when you just look at the two goals that they have had, right? The two things that they are trying to accomplish, and what's happened over the last 4 to 5 years,
They've met it.
they've done a decent job.
Is it just them?
No,
I think this overall economy is like, it's a weird thing since COVID. I don't give them credit. I say they haven't screwed it up.
Well,
And that's kind of what I mean.
They should not
Because
get all
you can look at other points and where it's like, okay, they absolutely
up.
screwed it up.
Yeah, that's true.
This time, I think they've done a little better job of just kind of staying out of the way, even though they haven't, and they're still way too involved.
Right.
They haven't screwed it up as much as they could have.
Yeah.
They get too much of the blame when things go bad.
Yeah.
And they probably get too much of the credit when things are good. Now, a year and a half ago, 2 years ago, if you had said soft landing, Powell's going to land this plane in a great way, I think all of us would have been like, history says it ain't going to happen.
Yeah.
Right.
But
I'm still
so
not
far-
sure.
I'm
still not sure that I believe we're gonna just avoid anything bad for this. But I mean, again, I'm the outlier. I get it, but I don't. I see all the things I've looked at in 100 years of history, and the M2 measure money, the inflation rates, historical bounce up and down, and so on, and then COVID, which is an unusual thing that's never happened to us before, and it's unwound. It looks like it's
We're not going to
unwound.
avoid anything happening, but at this point, we are either there or to the point where it's going to take something else coming in to tip us over.
One thing I'm worried
Right?
about is that inflation creeps back up.
Sure.
That's the only concern. I really, honestly, I'm not as concerned as I used to be. Right?
Yeah.
But inflation concerns me that it could come
Sure.
back into play.
Sure.
And rear its ugly head. And then what do we do?
And some of the
And that's
and some of
could
the in some of the presentations last week, that was a real concern.
And
was
inflation is a very much a kind of self-fulfilling, like just the idea,
Yeah.
like we need to stop talking about it. So we don't put it- but just
I know.
just the idea
I
of
know.
inflation, right, can
Create,
kind of
yeah.
build and create more.
If you had to take a snapshot right now of the economy and you had to put a guess by this time next year, so going into December
Yeah.
of 25,
Yeah.
how many additional rate cuts do you think we get?
Between now and December 25.
I mean, a year from now.
Gosh, I'm gonna say less than. This is an easy answer for me because it's so big, but I'm gonna say less than 3.
Wow.
So I'm gonna say we're gonna have one in December.
and then only 2.
then-
I
Yeah.
was the first number that jumped to mind was 2.
Yeah.
I just don't
Now,
know why. I just don't know why you would need to.
You know, I agree. I think the economy says that.
Yeah.
If the over-under's 3,
Yeah.
I'll take the over, but not by much. But I mean, 3 months ago, I mean, they were saying 3 or 4 this year,
Yeah.
5 or 6 next year.
Which is crazy.
I know.
That's crazy.
I know.
It's-
And
Because
it-
the market
I know.
is taking care of itself.
Yeah.
So
You just increased rates 500% over the course
exactly.
of 18 months. So it's like, why try to get it back down to where it was in 18 months?
I agree totally, 100%.
You know?
And you made a point several podcasts ago, which I bring back, and again, it hurts me because you were right. When you look at this overall inflation rate of it's not really that off a whack of historical numbers. Interest rates aren't that off of whack of historical numbers. In fact, they're
Right.
pretty close to historical average. It's not like we're way out of line with historical average. We've just been spoiled. We had 10 years or plus of no interest rate environment, which is just spoiled rotten, right?
Yeah.
Housing rates, everything. Businesses able to borrow at nothing. Our government able to borrow at nothing. And that's just not natural. So I kind of think we've gotten back to the point of why force it back down.
And the longer you go with mortgage rates at, I'm not saying I want mortgage rates to be at 6.5%,
Sure.
7%, but
Sure.
the longer you go with rates at 5, 6, 7%, hopefully they could be closer to 5 or 6 instead of 7.
Yeah.
But the more the market and people just adjust, right? The market would adjust,
Yeah.
home prices would adjust over time. Now it takes time. That's the thing is like
Yeah.
we want, hey, mortgages are at 7%. We want the market to adjust and home prices to come down accordingly. It didn't
Yeah.
happen. Home prices have stayed pretty strong, but over time, the markets will adjust to it, and it will normalize, and people will adjust. And
2005, 2006, Northwest Arkansas, for example, we had all these subdivisions being built all over the place, and they were big homes. It was like 3,000 square foot plus homes. Now, all across town, all across Northwest Arkansas, you see new subdivisions being built. It's 2,400, it's
Yeah.
1,800, it's 2,100. So even though the prices per square foot are higher, interest rates are higher, you just have to go get less home
yeah,
to achieve the same thing. I grew up in a 1,500 square foot home, and I thought it was a mansion.
Yeah.
Right. And we were also spoiled with that fact. So to your point, things will adjust even if it's like houses go down in size, right? What we can buy as our first home is less.
Sure.
It's not as big as it was 10 years ago, I
Yep.
guess.
Yep.
So one
So-
way or another, it'll adjust.
So 2
2 and 3, and wow, we'll mark this tape.
Do you think more, Lee, I'm guessing? Is that what you're thinking?
You said
I
you
think
would take the
I'll
over.
take 4. I'll
Yeah.
take 4. Yeah.
Okay. Well, we'll see. So we're here halfway through November almost. Santa Claus rally, kind of end of year rally.
Came early.
Yeah.
Yeah.
Yeah. That's
Yeah.
what I was about to say. So we've had such a strong rally coming out of
Yeah.
the election. It'll be really interesting to see, how we end the year. Do we give some of that back? Is it flat, or can we continue through the end of the year?
Tesla's up like 50% since the election.
I know, it's crazy. I say we're going to keep going up because earnings were good, right? We have not really had any shocking bad earnings. In fact, they've been main good. Banks are leading the way right now. Yeah, feels good.
Yeah, for sure. Well, big week last week, for sure. A lot going
Everybody
on.
can exhale.
This week is kind of boring compared to last week. So,
Yeah, there's not going to be anything like that for a while.
yeah.
For
Well,
at least 4 more years.
Exactly.
yeah, midterms will be very interesting, like you said earlier. As always, we appreciate you guys listening. Give us a like, subscribe, comment. We love checking those out. We really appreciate it. So we'll look forward to seeing you guys next week.
Have a great week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. Mach 1 may only transact business in those states in which the firm maintains a notice filing or has qualified for an exemption or exclusion from registration. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com. Thank you for listening to the Market Moment podcast.